Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian currencies slumped to their weakest since 2022 on bets US interest rates may stay higher for longer. The yen slides to levels not seen since 1986, raising the possibility of intervention. UK Prime Minister Rishi Sunak and Labour's Keir Starmer get combative in their final TV debate 1 week ahead of the election. We bring you the highlights. Plus, a familiar face is taking the helm of the Swiss National Bank. We break down what to expect from the leadership of Martin Schlegel. Let's check in the markets then, because one of the key drivers across the asset space, particularly in the equity markets, is Micron and a mismatch in terms of expectations and delivery, at least for this maker of memory chips. And we will get on to the market moves around that shortly. But that is playing into what's happening in the equity markets. Certainly, you are pointing to a lower start this Thursday, June the 26th, in Europe. European futures pointing lower by 0.2%. Here in the UK, the FTSE 100 looking to a loss of around 17 points as things stand. As again, we count down 1 week away from that election, of course, July the 4th, next Thursday here in the UK. In terms of S&P futures, stateside looking to losses of 0.3%. NASDAQ futures also pointing lower by currently 72 points. And part of that will be down to what's happening with Micron. Let's flip the board and have a look in terms of the outlook. And this was key for Micron. The outlook that missed some of the more ambitious expectations across these markets. You can see Micron down as a result of that. After hours, close to 8%. The ripple across to the semiconductor space in Asia, Nvidia as well in the US. But semiconductors, chip makers in Asia also feeling the pain of this. And it's a reminder on a week when you've seen volatility pronounced around the moves on Nvidia, the losses, of course, over a 3-day period, and then the rebound. Now the question marks around Micron. And it's a reminder of the risks in terms of the expectations for this AI frenzy and the ability to match those expectations. We'll continue to unpack this story for you, of course, throughout this hour. Let's flip the board and look cross-asset briefly. Bit of a sell-off across US Treasuries yesterday, again, tying into this expectation that rates will be higher for longer, that maybe the inflation data on Friday out of the US PCE will come in slightly higher than expectations. The US 10-year at 4.32 right now. 106 on euro dollar. A little bit of strength coming through, up 0.1%. That's as a result of the Bloomberg dollar index, the dollar giving back some of its recent gains, at least in the session today. 160, though, on the Japanese yen, currently down 0.3%, $85 a barrel. On Brent, down 0.2%. Let's cross over to Asia now, where Avril Hong is standing by in Singapore with a focus on the yen and the read across in terms of the Micron story. Avril.
Absolutely, Tom. Those are the themes that we are watching in this part of the world today. Asia equities are down. The chip stocks are declining, among the biggest drags on the benchmark. No thanks to Micron, compounding those concerns about AI valuations just being too high. But it's not just tech that is down today. We're seeing all 11 sectors on the MSCI Asia Pacific in negative territory, which also tells us that the focus is really on those PCE numbers from the US on Friday. We are seeing on the mainland that decline, but the Hang Seng is really the one that's catching our eye. Underperformance there. Today we got China industrial profits. The numbers were uninspiring. Beijing relaxing home buying restrictions, not helping to lift sentiment at all. Flip the board. As we see those concerns about the Chinese economy, dollar China has been nudging higher. And of course, this is against the backdrop of their resurgence in the dollar, although we're seeing a bit of a pullback now. Offshore yuan has earlier breached 730, recovering now. But I wanted to flag also what we're seeing from the PBOC, a weak yuan fix. It's had a string of this, I think, for the longest period in about a year. And what this suggests is that the central bankers are coming through with controlled devaluation ahead of risks, not just from PCE numbers, but also further out, the US election. Think about what that might mean for tariffs and Chinese goods. We are seeing the yen recovering from that 1986 low of 160.87. But of course, if the Japanese rates don't go high enough and the US ones don't come down, we're going to see that weakness in the yen Fed needs to ease before we see any relenting in this level of weakness of the Japanese currency. Flip the board, because that brings me to my next point. When you look at the 1 week risk reversals, it suggests that options traders, they're not so scared about the intervention risk from Japanese authorities compared to April. We are seeing them actually favoring the yen less compared to the dollar this time around, Tom.
OK, Ava Hong, thank you very much indeed with the deep dive on the Asian markets, ending, of course, on what's happening in terms of the positioning around the Japanese yen. We'll get more analysis right now on the Japanese currency and bring in Mark Cranfield from Bloomberg's M Live team. Mark, what are traders latching onto as they continue to bet against the Japanese currency?
It's a theme that you and I have discussed several times, I think, in the past few weeks, is this disconnect between where the Bank of Japan stand and where the Japanese Ministry of Finance stand. So the Ministry of Finance has responsibility for acting in the foreign exchange market when they see the right time to do so. We've seen them do it quite aggressively this year without much success. And traders can see that intervention on its own, without changes to monetary policy on the other side, is not a very effective tool when you're facing United States interest rates, which are so high and don't look as though they're going to be coming down in the near term. So that's the gap that the traders are going between to exploit the difference in what we're hearing from the Japanese authorities and the ineffectiveness of the intervention they did, and the fact that interest rates remain extremely low in Japan. So it's not a coordinated policy. Traders can see the weakness in that, and that's what they're exploiting.
We're talking ultimately about the impotence, the relative impotence at least, of the Ministry of Finance over in Tokyo. To what extent is the BOJ also impotent at this point? What other signals are traders looking for in terms of a potential change of policy from the Central Bank of Japan?
There's a lot of talk that this July Bank of Japan meeting, when it comes around, will be a so-called live event. People are expecting something to be done, whether it's on monetary policy or whether it's on quantitative tightening in terms of reducing the amount of bonds they buy. But there's obviously been a lot of disappointment. Both the April and the June Bank of Japan meetings, in advance of that, people had high expectations that something was going to change in terms of policy that would go on to support the Japanese currency. In both cases, neither happened. And we see the results. Dollar yen reached another very high level again last night. It's still above 160 today. So really, it's now down to the Bank of Japan to surprise the market or even shock the market by doing something that really stuns people and says, yes, you mean business. You really want to support your currency. And that could be a so-called double whammy. They could actually raise interest rates in July and at the same time announce a significant reduction in bond purchases. If they do it together, the market would probably be caught offside because they're not, given what's happened in the past couple of meetings, they're not expecting much from the Bank of Japan. Maybe one step or the other, and even if they do something, it won't be that decisive. So it's definitely an opportunity for the Bank of Japan to say, yes, we see these wage increases have been big enough. We're very happy with those. We feel confident to change policy. Let's do it all in one go in July and see how much it helps the yen. But I think there'll be plenty of traders who won't be holding their breath on that outcome.
OK, Mark Cranfield on the outside prospects, at least for now, of a potential double whammy from the Bank of Japan as they look to address maybe the weakness in the Japanese currency. From our M Live team, always with the fantastic analysis. Mark, thank you. To the politics of the UK now, where Prime Minister Rishi Sunak and Labour leader Keir Starmer have clashed in their final TV debate before next week's election. Starmer accused Sunak of being out of touch, while Sunak attacked Starmer on taxes.
And I just want to address Beverly's point.
You opposed it when I announced it. You literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch. Beverly.
If you want higher taxes and higher welfare, that's what Keir Starmer will do. If you want lower taxes and lower welfare, that's what I will do. Do not surrender to our welfare system to the Labour Party and Keir Starmer.
All right, Bloomberg's Adam Blenford joins me now for the take on this final debate as we lead up, of course, 1 week away from that election here in the UK on July the 4th. What was at stake then, Adam, last night? And what was the assessment, essentially, of how the two leaders performed?
Good morning, Tom. Well, probably more was a little bit at stake for Rishi Sunak in the sense that this was effectively his last chance to go head to head with Keir Starmer in the election campaign. This was a huge platform for the both of them, prime time on the BBC, obviously the national broadcaster. So a great deal of exposure and pitting their styles and their policies head to head. For Starmer, you could say that the stakes were even higher. Obviously, he's on the cusp of Downing Street. He's a week away from what polls predict would be an overwhelming election win. But he had to stay solid, and he largely did stay solid. In the previous debate between these two men a few weeks ago, Starmer was on the defensive over Sunak's claims that Labour would push up Britain's taxes by an average of more than £2,000 per working family. Starmer was a little more flexible on that tonight, a little bit more responsive. But Sunak in particular did come out very combative. His Conservative Party were on the attack almost before the debate started. They rebranded one of their social media accounts as a tax fact check account, which was a slightly kind of a bit of a gimmick, really. But it kind of gave a sense of what they were trying to do. They were trying to go on the offensive, and Sunak had a lot of punch to his argument, his words. But as you saw there from some of Sunak's ripostes, he fended them off pretty well.
OK, so this time next week, the British people go to the polls. How does this set up the remainder of the campaign then, Adam?
Well, there was a snap poll at the end of this that from YouGov, one of the pollsters, that showed, in fact, that after 75 minutes of debate, which you could perhaps read as 5 or 6 weeks of election campaigning, the audience was split about 50-50 on who did well. That wasn't enough for Sunak. His party is around still about 20 points behind in the polls, because over the length of the campaign, the polling gap between the Conservatives and Labour hasn't really narrowed. What we have seen, as you can see there in that graphic, is a rise in the polls by the right-wing Reform Party, who are taking, we think, votes potentially away from Sunak and the Conservatives. That's still the big concern as he goes into the final week. The message from the Conservatives is that a vote for anyone other than them will deliver a very large Labour majority. And their message overriding, which they kept hammering home last night, was that Labour would raise people's taxes. Starmer continues to deny, of course, that they will raise many of the main taxes, but there does remain obviously some wiggle room around the minutiae of policies which we might see from a Labour government after the election.
OK, Bloomberg's EMEA News Desk managing editor Adam Blenford on the key takeaways from that final TV debate between the Prime Minister and his key opponent, of course, Keir Starmer. Other parties, of course, making their bids, as we saw in that graphic, of course, around that election. We are in the final throes, of course, the Lib Dems, Reform UK and, of course, the Green Party all in the mix as well. So we count down to the election on July the 4th. Meanwhile, for the day ahead today, this Thursday, of course, June the 27th, here's what else to be thinking about. 1:30 p.m. UK time, we're going to get the US data, particularly with a focus on GDP data for the most recent quarter, but also jobless claims as well. As we've started to see a little bit of cooling around the labour market of the US. Talking of which, and this links in, 9:15 p.m. UK time, Nike with the gauge on the consumer, the retail space of the US as well, but also that exposure to markets like China. So that will be interesting in terms of the earnings coming out of Nike. And as you can see, over 1 year, the stock is down, close to 17%. 2 a.m. US time, this is the big one in terms of the politics of the US. The first presidential debate between former President, of course, Donald Trump and current President Joe Biden. That takes place later today with a focus, of course, as we count down to the election in the US in November. Coming up, a new but familiar face has been picked to lead the Swiss National Bank. More on what to expect from Martin Schlegel ahead of his promotion to the SNB president and that spot. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A redhead crossing the terminal right now and a reminder of the turn in sentiment around Chinese equities. The MSCI China Index down 10% from its May high, now set for correction. This as investors reassess the policy response, particularly targeted at the real estate sector of China, and consensus view coming through that will not be enough to put a floor in terms of the downside you've seen on prices around real estate and what that means in terms of the consumer in China as well. Industrial production data coming out earlier today. We continue to watch the data. Hopes within Beijing that exports will provide some kind of ballast. But for now, again, the investor community has turned on Chinese equities. We'll see how this unfolds, of course, over the next few days. But as you can see, the MSCI China index currently down in the session, down close to 2%. But since that May high, in now and set for correction territory, a drop of around 10%. Now to central banking and closer to home, the Swiss National Bank announcing that current Vice Chair Martin Schlegel will be taking over the top job from October of this year. He's going to succeed Thomas Jordan, who has endorsed Schlegel for the position. For more on this, let's bring in Bloomberg's Bastian Benrath in Zurich. Bastian, what do we know then about the incoming chair?
Well, we know, for example, that he's younger. He's just 47 years old, so he's significantly younger than Thomas Jordan. We also know that he has an international exposure. He has led the SNB's office in Singapore, so he knows the international plane as well. And the most important thing, however, is that he joined the SNB as an intern to the current chairman, Thomas Jordan. And that makes him a protege of his. He has been following in his footsteps all of his career. He joined some 20 years ago, so that's been a long career, but he's very much seen as a chosen successor of Thomas Jordan. And so if you look at Swiss monetary policy, I don't think there's a lot to change. This decision to appoint him chairman was widely expected. Markets are totally prepared for this. We're kind of knowing what is coming, and there's not really a change to monetary policy coming.
OK, well, you touch on this, but unpack it for us in a little bit more detail, Bastian, in terms of expectations around the policy, of course, with that focus on the currency of Switzerland, particularly given the political risk in countries like France, neighbouring countries like France. Talk to us about how policy may be adjusted, or at least where the focus, where the attention and where the underlining may be coming from this new chair come October when it comes to the monetary policy of the SNB.
Well, the SNB is on a quite aggressive easing journey. They roiled and surprised markets back in March when they did the first easing step by 25 basis points before the ECB had moved, before any other group of 10 central bank had moved. And they confirmed the stance just this month with taking another step down, although economists had expected that they might hold, given the global hesitancy among the ECB, among the Fed, So they are on this easing journey, and the fact that they stick to it so aggressively has indeed probably something to do with the political uncertainty which you mentioned. We've seen a strong appreciation of the franc as investors flocked into the franc as a safe haven, given the political uncertainty in France in particular, but also in all of Europe. So Martin Schlegel will be just following all his predecessors in the SNB chair in battling the appreciation tendencies of the franc. And he will continue to do so. Economists at this time predict one more cut this year until the end of the year. But this will be definitely determined by how the franc continues to evolve. If the franc goes up further and keeps on getting up, then maybe we could see an even more aggressive policy easing, or also balance sheet measures. Like the SNB has long used its balance sheet to intervene in the franc exchange rate, and Martin Schlegel is no stranger to that, so that is definitely also on the table for the future.
OK, Bloomberg's Bastian Benrath in Zurich. Thank you very much indeed with the context around the change at the top at the SNB, of course, coming into place from October, and what it could mean for monetary policy of Switzerland. Thank you, Bastian. And staying on the question of monetary policy, it is the Riksbank's turn, 8:30 a.m. UK time, to make that decision. All 20 economists polled by Bloomberg expect the Riksbank to leave rates unchanged at 3.75%. Interestingly, of course, the Riksbank of Sweden cut before the ECB. They cut in May. They are expected to hold. Inflation data appears to be coming in line with their views, but there's a sense from the economists we've been speaking to that there's going to be a cautionary, or at least a cautious approach coming through from the Riksbank. They are expected then to hold at 3.75%. But of course, any commentary around that expected hold will be interesting as well. That coming through 8:30 a.m. UK time. Coming up, Kenyan President William Ruto bows to public pressure, scrapping his controversial tax plan. That's after protests led to more than 20 deaths. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Kenya's president says he will not sign a controversial bill proposing steep tax rises that sparked deadly protests this week in Nairobi. William Ruto bowed to public pressure after the deaths of at least 23 people. For more on this, let's bring in Bloomberg's Ondiro Oganga, who's been following all of this for us from the outset. Joining me now from Kigali. Ondiro, what led then to the president dropping this controversial bill?
Tom, it's the sheer determination of Kenyans. Over and over again, we've heard them say reject finance bill, and they've showed signs that they're not going to bow down. And we saw the president finally saying, I concede. And this is a stark difference from his previous address, where he was very bullish in his tone, used words like dangerous, criminal, and treason. But in his latest address, he almost adopted a humble tone, saying he's open to dialogue and he wants to listen to the people. This bill now gets sent to Parliament together with a presidential memorandum recommending that all these clauses in the finance bill be deleted. We've also seen international pressure begin to mount. The United Nations Secretary General Antonio Guterres says he's deeply concerned by the violence in Kenya, the detentions, and also asked the members of authorities to practice a little bit of restraint. Kenyans think that it's too little, too late. They're going back to the streets. Their trust has been broken, and they feel that if the president was to do something, he had a chance to do that before lives were lost.
It's also a reminder, isn't it, of the gap sometimes existing, not just in Kenya, but other jurisdictions, between the people, the population and the markets. What has the market reaction been since the government agreed to drop this bill?
We're seeing securities handing investors negative 1.3% since 18th of June. And this is the biggest loss following Gabon and Egypt. And this is according to a Bloomberg index of developing nations sovereign dollar bond. If we zoom in on Kenya's 2031 dollar bond, it rebounded a little bit after the losses that it had recorded following President William Ruto's statement. And we saw it trading slightly stronger with yields at 10.67%. Concerns remain about Kenya's long-term solvency plan. There are also concerns that geopolitical tension continues to make things harder, particularly due to higher energy and food prices. Coupled with other economic challenges that the youth are facing, it makes things harder. The bottom line remains Kenya needs to balance its budget. One way, increase revenue, or the other way, cut spending. We wait to see what direction the government takes.
OK, Bloomberg's Ondiro Oganga on the latest out of Kenya on that, of course, surprising twist to some extent. Ondiro, thank you very much indeed. Don't miss, by the way, Bloomberg's monthly Africa Amplified programme for a deep dive into this story and others impacting, of course, markets on the continent. The next show on Thursday, July the 4th, is going to bring you top voices from the travel sector. Now, Bolivian President Luis Arce has sworn in a new army commander after troops led by the general's predecessor stormed the presidential palace in an attempted coup. Hours earlier, Bolivian troops crashed a tank into the palace in a bid to overturn Arce's socialist government. His administration has struggled with an economic crisis amid dwindling natural gas exports, a shortage of dollars and a currency peg that has effectively collapsed. Coming up, Rishi Sunak and Keir Starmer facing off in the UK election campaign's final TV debate. We look at how markets and what markets are watching for with 1 week to go to voting day. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian equities and US futures slide with big tech hit as Micron's outlook falls short of those lofty expectations. Here in the UK, Prime Minister Rishi Sunak and Labour's Keir Starmer get combative in their final TV debate 1 week ahead of the election. We bring you the highlights. Plus, Bloomberg has learned that SPACEX is to sell insider shares, valuing Elon Musk's space and satellite company at close to 210 billion US dollars, one of the most valuable privately held companies in the world. Let's check in on the markets right now. You are set for a bit of downside coming through for European stocks. The downside pressure was there yesterday, modest, relatively modest, but we look to build on the downside again today with question marks over the tech sector, over semiconductors, given again that the outlook from Micron did not meet some of those loftier expectations. There's been the read across to the Asian markets with semis in that part of the world being squeezed on the back of this story. European futures now down 0.1%. We're getting data as well around the Eurozone and European consumer later today. That will maybe feed in to the picture. We had, of course, Olli Rehn of the ECB suggesting that 2 rate cuts from the European Central Bank is possibly still appropriate this year. FTSE 100 futures pointing to losses of 13 points. S&P futures pointing low by 0.3%. Nasdaq futures is also set to take a bit of a hit, at least as things stand, looking to lose around 69 points, and certainly Micron will be part of that story. Let's flip the board and look cross-asset. You had a bit of sell-off in terms of US Treasuries yesterday as we build up to that key inflation data out of the US on Friday. 4.33 on the US 10-year. The single currency here in the Eurozone, or at least in the Eurozone, beyond the UK borders, 106, close to 107, just up 0.1%. A little bit of softness coming through from the dollar after the gains of recent days. 160 on the Japanese yen, currently moving lower by 0.2%. An intervention watch firmly, of course, in focus. But is this a Ministry of Finance in Japan that's relatively impotent in the face of those higher rates in the US? $85 a barrel on Brent, down 0.2%. Let's get back to the UK then, where opposition Labour leader Keir Starmer, who polls, of course, suggest is on course to be the next Prime Minister, has told ITV he would target GDP growth of at least 2.5%. That came through earlier this week. For more on the UK economy then and whether that is feasible, let's bring in Josie Anderson, senior economist at Experian. And Josie, thanks for joining us in the studio this morning. We'll talk about this, but we'll also get your views on the BOE and also how the tech sector of the UK could be something of a bright spot. But let's start with this growth target then. 2.5% is what Keir Starmer suggested, hinted at. Is that feasible? How would we get there here in the UK?
I would call that ambitious. So between 2010 and 2019, we saw average annual GDP growth of 2%, so slightly below that 2.5%. And in terms of what we are forecasting, we're seeing 0.8% GDP growth this year, which is obviously a pickup from the 0.1% last year. And then that rising to around 2% GDP growth over the 5-year forecast horizon. But we're not forecasting above 2%. So as I said, that's an ambitious target, and you'd need to see probably quite heavy investment in some areas of the economy, so stimulus from the government boosting that GDP growth. But obviously, recently, the cost of living crisis has really affected consumer demand, and we're only forecasting 0.3% growth in consumer spending this year. And that's one of the biggest areas of the economy that can stimulate growth. So we really need to get consumers back to spending to see higher growth. OK, there's a lot to unpack there. Let's start with that 0.8% target for growth for the UK this year. What assumption is baked into that around Bank of England cuts? So we're forecasting 2 bank rate cuts this year, one in August and then one later in the year. Obviously, we've had inflation now hit that 2% target in the UK in May. And in the meeting last week from the MPC, we saw 2 members vote for a rate cut, but also some sentiment that others are more comfortable with the rate of inflation now and would potentially be up for cutting rates later in the summer. But obviously the issue with inflation is services inflation at the moment, which stands at a higher level. And there's concern that that will come down a lot slower. And so the Bank of England will be watching out for that. OK, so the stickiness of services inflation. How do you see inflation evolving then? What are the potential risks to the disinflation that we've seen? As you say, we're back to that 2% target on a headline basis. What are the risks around that move lower? Yeah, so it's goods inflation that's been bringing it down, and that's driven by things like energy and food. And actually, we're expecting another Ofgem energy price cap in July. That is fully agreed that it will be 7%. But then actually looking ahead to the end of the year in October, a projected 12% rise is expected. So goods inflation could come up towards the end of the year. So that is a risk. Also, housing demand, particularly in the rental sector, could potentially push up inflation a little bit. So we do see it falling actually to 1.9% in June, but then rising slightly again towards the end of the year.
You touched on the consumer. It's a big summer for sport. Of course, we've got the Euros right now, and we can look past England's pretty dire performance. OK, but we have the Olympics as well in France. You've been crunching the numbers. In terms of the boost for consumer spending, how much are we looking at?
Yeah, so we've looked at the numbers, done some regression analysis and estimated that the additional spending in things like bars, pubs, also retail spending for consuming at home could boost the economy by £230 million over the 3-month period when we've got the Euros and also the Olympics. So that is a bright spot in terms of that weak consumer spending coming out of the cost of living crisis.
Both parties, Labour and the Tories, of course, both expected to be, they're the lead contenders. There's a 20-point poll gap, of course, between Labour and the Conservatives. Both leaders talking up UK tech. What is the opportunity around the UK tech sector? To what extent is that a silver lining? To what extent is that a bright spot in this UK economy?
Yes, we do forecast different sectors of the UK economy and the growth they're expected to contribute. And we do see the tech sector as a bright area. Obviously, so many developments recently, including AI, offering more and more opportunities for the sector. And we expect it to increase in importance, rising from about 7.1% of economic output currently to 7.6% just within the next 5 years. And obviously, the opportunities are endless beyond that. And we're forecasting growth to be stronger than in other big sectors in the UK, like professional services and banking and finance. And actually, our analysis also looked at tech hubs in the UK. And while, of course, London is particularly strong for the tech sector, we also see outside the southeast, Salford being a particular tech hub, with nearly 10% of jobs coming from the tech sector there. So it's across the UK that the tech sector offers opportunities.
Josie Anderson, thank you very much indeed. Excellent breakdown of what we're seeing across this UK economy. The projection, of course, of 0.8% GDP growth for this economy, at least by the end of this year, with 2 cuts coming through from the Bank of England. Is the call from Josie Anderson, experienced senior economist, with also a view on tech. Talking of which, Micron, stateside, of course, shares slumping post-market after its forecast disappointed investors seeking a bigger payoff from the AI mania. Let's get more from our tech reporter, Annabelle Drewler, standing by for us over in Hong Kong. Annabelle, talk to us about what's been happening with Micron, because on one level, the earnings matched, or indeed on some levels, on some metrics, beat expectations, but it was the outlook that disappointed.
Yeah, and even when you take a look at sort of what Wall Street had been expecting in terms of the sales outlook, it kind of really did meet what Micron said. But let's just stand back and have a look at what we saw over the course of this year, because it has been that big run-up in Micron stock, around 65%. So it does really just point to how much expectation there was on Micron to deliver here. So going into the earnings, the average estimate for the fourth quarter for sales was $7.6 billion. That is nearly a jump of 80% on the year. Again, it just points to those lofty expectations. What Micron delivered was a range of 7.4 to 7.8. So at 7.6, you're still sitting at the midpoint of that. But where investors really got disappointed, perhaps, was at that higher end of the range. So there were some on Wall Street that were saying we could see sales in the fourth quarter topping the $8 billion mark instead. And so that sort of led to that move in after hours, a slump of around 8%. Yes, as you say. That was the big move in after hours. We should also know what was the big move intraday, and that was most certainly Amazon, because we saw a move of around 4% in the stock. But what that did was give it entry into what's been a very exclusive club. I'm, of course, talking about the $2 trillion club. Last week it was Nvidia and the $3 trillion club. But we do have the $2 trillion club, and that also includes Alphabet, Microsoft, Apple as well.
Yeah, don't forget the $2 trillion club. Meanwhile, look, I know this is something you cover really closely as well, Annabelle, in terms of the AI space, with a focus on the chat models. Perplexity, I've got it on my phone. They gave me news alerts. They did not tell me that SoftBank is buying this business for what, $3 billion US? Talk to us about that.
Well, I mean, maybe it's because it's part of a bigger funding round. So what we're hearing from sources here is essentially there's a new funding round taking place for Perplexity AI. For people that aren't familiar, it's sort of a company that's often spoke about in the same sentence as Google. There's, of course, been a lot of startups that have tried and failed to challenge Google over the years, but still it's looking a little bit more shakier of late. But what we're hearing from sources is SoftBank, we knew it wanted to make a big ticket investment into an AI company. Perplexity could be the one. As I said, it's only been around 2 years. It is sort sort of a startup, but it has been looking for further funding. This round could be for $250 million. SoftBank could be looking to put in between $10 and $20 million at a valuation of $3 billion, so tripling on what it was previously. That does, as you say, make Perplexity now one of possibly the most highly valued companies in the industry, so certainly one to watch.
Yeah, and talking of values, SpaceX, we got a bit more of a steer in terms of how valuable this company is.
Yeah, this is through a different way we're seeing that, but there's possibly another tender offer underway. And so what we're hearing is that employees, the insiders, they could now be able to sell shares at around $112 a piece. We last reported on a funding or a tender offer taking place at the end of last year. At that point, shares were being sold at $97 a piece. So that increase to $112. It now puts the company's value at around the $210 billion mark. That's around a $30 billion gain in just the last 6 months or so. It tells us that there is perhaps significant investor demand here. As we said, it is according to Bloomberg sources. This is a scoop for us. The caveat, of course, being that the terms aren't finalised. The size of the deal could change, but still $210 billion possibly. That would be a record for an American private company, Tom.
Annabelle Drulas, fantastic stuff, wrapping up a lot of tech news for us, ending on SpaceX and the valuation there. Annabelle, thank you, joining us out of Hong Kong. Let's get back to the politics of the Eurozone, of course, with a lens on France. We've got the latest polling coming through as we lead up, of course, to the first parliamentary round of voting on Sunday. On the left-wing side, France's left-wing alliance has now 29%. That's according to this Ipsos poll. Le Pen's group, meanwhile, National Rally, has 36%. Macron's group in third place with 19.5%. Again, this is according to the Ipsos poll. So from top to bottom, Le Pen's group, top of the list in terms of this poll, coming through 36% of support, followed by the left-wing alliance on 29% and Macron's group at 19.5%. We continue to keep across, of course, the French politics for you throughout the next few hours. Talking of politics and switching focus to China, because the long-awaited plenum, we have dates for that coming through. This is a red head across the terminal when it comes to China. Really, really significant meeting in terms of setting the economic agenda for the world's second largest economy longer term. The dates then being set July the 15th to the 18th. July the 15th to the 18th is when China will be holding that plenum. It's been delayed. Now we have the dates. There will be a lot of scrutiny in terms of any policies that come out of that meeting. So that's one to mark on your calendar as well. Stay with us, by the way, for a bigger conversation about China. We're going to be talking to the US ambassador to China, Nicholas Burns, about trade and tariffs and that Russian defense pact with North Korea. That's at 7:15 a.m. UK time. Coming up, Joe Biden and Donald Trump prepare to face off in their first TV debate ahead of November's hotly contested election. We bring you the preview, what to expect from that presidential debate. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday, June the 27th. Just checking the date there. President Joe Biden and former President Donald Trump are preparing for the first US presidential debate ahead of November's election. Biden's campaign already sees one victory with the absence of third-party challenger Robert F. Kennedy Jr. from the stage. Let's get more then on what to expect from this presidential TV debate with Bloomberg Markets Today anchor Kriti Gupta, of course, always follows the twists and turns of US politics very closely for us. What are you going to be looking for? How could this reset or reframe this race?
I'm going to be looking for the best place to get my popcorn out at 2 a.m. in the morning because I am going to be glued to the television screen. Look, this is going to be a lot about domestic policy more than foreign policy. There's a lot going on right now in terms of the latest Supreme Court decisions, things like abortion, immigration control, gun control even, that are all going to be coming up, not to mention the convictions on both Hunter Biden and Donald Trump that you've had in the last couple of months as well. So those are going to be hot button issues. The debate is already set up to really test things like mental and physical stamina as well. lack of kind of consultations with the debate team. But the policies that are going to be in focus in terms of the financial markets will be things like tariff policy, how hard you want to go in on China, for example, how you're going to handle the budget deficit. Whether or not those are going to be things they're outwardly going to be talking about is interesting. I think for the European audience, it'll also be a question of things like where the spending comes from. Biden has come under a lot of heat for the Inflation Reduction Act and things like investing in green energy, for example, and that kind of renewable story. Trump is likely to push back on it. So much of his electorate are going to be in oil-producing states in the U.S. So he's going to be really talking about investment, yes, in the United States, but in different sectors, and that might be where they differ.
Yeah, look, Biden has certainly felt the heat on inflation, hasn't he? But then Trump proposing tariffs across the board of 10% and a massive crackdown, potentially deporting up to 1 million migrants. Well, that would be inflationary as well, which is interesting given the messaging coming from Trump. Is this then a tradable event?
This is mixed because there is this narrative of if there's kind of a safe haven story that is associated with the states, that if you start to have some of that tariff rhetoric, for example, do you just buy the dollar immediately off of the back of it? On the other hand, though, the bond market is going to be reacting a little bit differently. They're keeping their eye on the budget story and, of course, the inflationary story. But even things like immigration, tariffs, that takes a while to not only reinstate, but for that to show up in the economic data and therefore for the Federal Reserve, for example, to react then later on. So that's something that's likely to have more of a temporary effect. But the dollar positioning is where I keep an eye on, especially when it's come in line with any sort of hint on the deficit story, the spending story. Remember, January 2025, whoever is the next president of the states, is the first thing they have to address after they're inaugurated.
Pretty good, sir. Fantastic setup ahead of that presidential debate. The first one, of course, of this electoral cycle as we count down to November. Kriti Gupta, anchor, of course, of the Markets Today show. OK, from the politics of the US to the politics of the European Union, where leaders are meeting as they look to wrap up a deal on the bloc's top jobs. After failing to reach agreement last week, they are poised to nominate Ursula von der Leyen for a second term as president of the EU's executive arm. Let's get more then from Bloomberg's Oliver Crook. Ollie, the first EU Council meeting since the election then. What do leaders need to get this done?
Yeah, so basically what they need to deliver at this meeting, this is really the top priorities, as you mentioned, is the top jobs. Because once you've established those three top jobs within the EU, the Commission President, the Foreign Policy Chief, as well as the European Council, from there everything else kind of trickles down in terms of the other commissions, but also sort of the policy priorities. So as you say, Ursula von der Leyen likely a shoo-in for the presidency, Kaja Kallas to deal with foreign policy from the Renew Party, and then Antonio Costas to do the European Council President. Now, what they also need to do, Tom, is come out with their so-called strategic agenda. Now, this is the document, Tom, that basically lays out the outline for the European policy priorities for the next 5 years for this new government within the EU. This is going to talk about some of the very familiar topics we've covered a lot here, Tom, whether it's defense, whether it's security, whether it's Ukraine, and also competitiveness. But also, Zelensky will be here in Brussels today, so we're expecting a renewed commitment from the EU. And let's also not forget, there will be the beginning of accession talks, of joining the EU from Ukraine. Those formal negotiations and talks began this week. So all that to watch for these leaders this week.
OK, there's a lot on the docket for them, isn't there? In terms of the power dynamic has shifted, hasn't it, across these EU institutions, or at least it's in the process of post-election. How is that playing out, Ollie?
Yeah, so there's, of course, the top jobs, and those are kind of the very concrete ways in which we're going to see sort of that play out. But then there's also the question about particularly Meloni and Macron. So Meloni yesterday got in front of Italian parliament and was railing against basically the EU process for appointing these top jobs. And then the next day she comes into Brussels to have those conversations. What's interesting for her is, despite this very sort of strong mandate that she has in Italy, it's interesting to see how she'll be able to exert that across the EU, because she really doesn't have a voice for the top jobs, because that's done through a qualified majority that doesn't need unanimity. On the other side, you have Macron on the sort of lame duck side of things. His sort of priorities definitely will be demoted. You know, he's one of the big advocates, probably the biggest advocate for joint debt in order to build out defense here in Europe. That will sort of fly away. Then, of course, you have the election in 2 days, and both the left and the right pose huge problems for the EU. The left with massive deficit spending, and the right, who basically want to subsidize a lot of their plans within France by basically cutting their contributions to the EU. So all this hangs over the discussions as well.
OK, fantastic stuff. Bloomberg's Oliver Crook setting us up for that crucial meeting, of course, with the EU. Amidst those changing dynamics and the implications, there's plenty more coming up. Stay with us. This is Bloomberg.
The deal flow is still not quite there.
Private equity
has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. So it may not be asset sale outright, but a transaction is going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully, which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
OK, leaders in asset management, banking and private markets weighing in on the outlook for deal activity at the Bloomberg Invest Summit. And the last speaker there talking about rates and the rate environment. Of course, interest rates still at that 5.25 to 5.5% level for the Federal Reserve. And that, of course, links into what's happening with the Japanese currency. A bit of relief so far in the session for the yen, currently at 160.36. But my goodness, relief for how long is the question. There is this impotence, it seems, within the Ministry of Finance of Japan to really do anything significant to support this currency. That, at least, is the view of many traders who continue to bet against the currency. It reached 160.87 yesterday, the weakest since 1986. It's down 12% versus the US dollar. So, will you come through in July with a BOJ with a double whammy? Mark Cranfield saying it's not base case, but the BOJ may be compelled to act, raising interest rates and maybe also adjusting their bond buying program. That is something maybe to have on your agenda, or at least in the back of your mind, as we lead up to that meeting from the BOJ in July. Before we get there, of course, the inflation data out of the US on Friday will be important as well. If you get a softer number, maybe some relief in terms of rates expectations and relief rippling across for the yen potentially. But right now, the Japanese currency, of course, modest relief in the session, but broadly, the pressure continues. Amazon, meanwhile, getting to a true $1 trillion mark, up 26% year to date, benefiting from cost cutting and also, of course, the support that's coming through from the AWS part of that business, leaning into the AI frenzy, Amazon, and being rewarded for that, breaking above $2 trillion in terms of market cap. Next hour on Bloomberg TV, the US ambassador to China. Nicholas Burns joins us live from our Shanghai studio. We'll be talking about trade, tariffs, and the Russian defence pact with North Korea, among other topics. That's at 7:15 a.m. UK time, just shy of 20 minutes away. That is all on Markets Today, which is up next. Stay with us. This is Bloomberg.